Welcome to XM.com. I'm Cristina Marujas, and you're watching the Daily Market Comment by Rafi Boyajian. Fresh concerns that the Delta COVID-19 strain will undermine the recovery in Asia and possibly elsewhere too hurt sentiment on Thursday, though positioning ahead of tomorrow's U.S. jobs data also made for some cautious trading. Friday's non-farm payrolls report will likely point to further progress in the U.S. jobs recovery, and although the numbers are not expected to be anything spectacular, they should nevertheless be strong enough to keep the Fed on track to begin withdrawing some of its stimulus later this year. Markets have slowly been adjusting to the prospect of less central bank stimulus in the coming months, but with the recovery still lagging in some major economies such as the Eurozone and Japan, and under threat in other places like Australia, the Fed could end up being one of the first to taper despite all the dovish rhetoric, and this is driving the US dollar higher, which hit a 3-month top earlier today. Asian stocks were down in the dumps on Thursday as manufacturing PMIs for June provided the first evidence that the increased virus restrictions because of the dangerous Delta variant is impeding economic activity. Most Asian stocks ended the day in the red, but the mood appears to have brightened up in the European session, with the region's major indices jumping by 1%. U.S. stock futures also perked up, rising by around 0.3%, putting the S&P 500 on course for a fifth consecutive record close. It was a more subdued tone, however, in currency markets as the euro slipped to almost 3-month lows against the U.S. dollar, while sterling was testing the key $138 level to the downside. Commodity-linked currencies also continue to struggle, and the Canadian dollar remains overpowered by its U.S. counterpart, even as oil prices firm from the overnight dip. WTI and Brent crude futures were last up more than 1% as investors don't see a significant danger of excess oil supply should the OPEC Plus alliance decide to raise production by 500,000 barrels per day as expected at their meeting today. But it's likely that OPEC and the other major producers will proceed very cautiously with their output increases, which should stave off a huge supply glut. Thank you for watching today's Daily Market Comment at XM.com.